All right, everyone. Well, welcome back. Our next session is all about you. What questions do you have? What thoughts would you like to share? We have a panel of our experts to answer any inquiry that you may have regarding any audit question. To ask a question, please just use the chat function and type in your questions, and we will answer them in the order that they come in. So panel, if you're ready, let's go ahead and get started here. We are receiving some questions that are quite long in nature. In the interest of time, we will not be answering all of those lengthy questions today, but we are going to get through a very large chunk of them. So if you have a longer question regarding a specific inquiry, please just send us an email at ndsao@nd.gov or give us a call, and we're always happy to connect one-on-one to answer some of those more detailed questions. But we do have a number of just kind of shorter questions here, so we'll start working our way through that. First question for the panel: to determine if a single audit is needed for an unrestricted use federal grant impact aid, are federal expenses prorated if the expenses are not specified as paid from this grant?
I believe you're asking a question about the basic part of the impact aid grant, and yes, you would include that as part of your federal expenditures.
Okay, wonderful. To keep your interim fund under the 75% line, can your board transfer from the general fund to a sewer fund in anticipation of some upcoming sewer expenses that will be over and above sewer revenues?
I think that the answer there is yes. You just will want to make sure that the board approves that transfer in a public meeting.
What is the Sentry Code regarding compensation to volunteers?
So there's one Sentry Code out there that you can look at, and that would be 65-06-01. And kind of go through that whole code, really the whole 06 code you can look at. And granted, since we're not attorneys, definitely go through your attorney while checking that out.
Is paying for a meal at a local restaurant when a meeting is held at the same time a violation of Sentry Code food law that you referenced?
That's a great question. This is kind of an interpretation of, when you talk about the Constitution that Dan talked about in his presentation. What you want to do is, anytime you think about paying for meals for anyone in that group, think about, is the entire entities citizens involved in that? Are they able to come and enjoy that as well? When it comes to certain individuals, I'd be careful and cautious about that, and I would definitely work with your attorney if there's very specific situations that you want to check out. But this is all interpretation right now, and we always just stress to be careful when spending tax dollars in that way.
Is there a listing of private firms that are approved to complete a government audit?
We don't provide a list of firms that are out there because it changes all the time. So what we recommend people when they contact our office is to contact the State Board of Accountancy, and they will provide that list.
Thank you. Can you transfer from a special revenue fund, such as the Road and Bridge Fund, to a capital asset fund? This would be potentially be for large road projects.
All right. I think, yeah, especially if you had budgeted for those expenditures originally in your road and bridge fund, if that project didn't happen by the time the year's over, definitely you can transfer that money out into a capital project fund to then be used for that project when you're able to do so.
And thanks for the great questions that keep on coming in here. Feel free to pop your question into the chat window and we will get to it. Next question, are cookies, donuts, or snacks for a meeting considered unallowable? What about bottled water for highway department on a road project?
So again, you want to be very careful when you're purchasing those type of items. When it comes to a meeting with snacks that are provided, if the entire public is invited to come to that and they are aware of it, I think our interpretation of that would be allowable. But you always have to remember that is that the best use of the taxpayers' monies if you're providing that for, sometimes those entities can be fairly large. So lots of citizens can be involved in that. So I would just be careful with that one. The water, Emily, could you say that one more time for the water part?
Yes, bottled water for highway department on a road project.
You know, that's a good question as well. I think if that's for, employees, I mean, water is water, right? I mean, if people need to drink something, that would be probably not out of the question. But again, I would consult with your attorney on that if you really want to get a definitive answer. But it's a good question.
Okay, another question regarding purchases. Can supplies for an employee retirement party or an open house be an allowed cost? Same type of answer. Okay, yep, absolutely.
Well, Emily, for local, I don't know what the answer is for local governments. For the state of North Dakota, they do allow certain expenditures for those types of retirement parties.
Mm-hmm.
But that's under policy. I believe our Office of Management Budget specifies what can be done. Again, I think local governments are going to have to talk to their council.
Absolutely. Another question, different area. Who completes the CFA, auditor or client?
The CFA can be done as part of a non-audit service. That's fairly common, but the client can also prepare the CFA.
Wonderful. Another question regarding the new financial review audit spreadsheet, wondering if there's going to be a webinar or training like there was for the new budget form. And I'll just take this one. Yes, we will be rolling out a brief training on that to provide some insight and guidance on how to use that new financial review form. Another question, what happens when I do not spend all of my budgeted appropriations in a year?
Well, really, your budget is only for a 1-year period. So if you don't spend it all, you're going to end up losing it. And that'll end up just going back, rolling into your overall cash balance at the end of the year.
Thank you. What will cause me to have an extended review compared to a normal small government review?
The extended review gets triggered from certain areas of audit risk that we've identified. I kind of mentioned some of those in my presentation, but the primary ones would be if during the review process we see that there is a general lack of knowledge on how to use the funds, how to do transfers, large projects or miscellaneous expense, large miscellaneous expense categories, and we can't really tell what all is rolled into that. As well, it could also be for those schools and cities that in the past didn't have to get an audit because they were below the population or student enrollment threshold, but yet they were still receiving revenues well in excess of the threshold that everybody else had to. So that would also cause it.
Sorry for the feedback we're getting here from some of the microphones. Looks like it's died down now, so that's a blessing. Another question is, what would be considered adequate support for budgeting project expenditures?
So if you're going to budget for some kind of like road project, for example, you might have like a 5-year road plan where okay, we're going to do these 2 roads next year. Maybe you have preliminary engineering estimates already that you could use as part of your analysis to figure out how much do we need to budget for that cost. Maybe you have some historical data on what it costs you per mile historically to fix up a road. So you can definitely use those types of items as your documentation.
Thanks for the questions that keep on coming in. Feel free to drop them in the chat box as we continue answering these. Do I have to include state aid and oil and gas revenue that I'm expecting to receive in my budget?
Yeah, kind of like I mentioned during the budget training today, you really want to include any type of revenue that you're going to have that you're expecting to get into your annual budget.
Do I have to use the State Auditor's Office budget file?
So although I would love everyone to use it, I did spend some time with it. It is what I've been telling people is if you have your own format or maybe a software can do it for you, as long as the elements are all in there that match up with what we are trying to follow with Century Code. If those elements are there, that it's okay. I think for a lot of cases, people do like using the file if they don't really have one. But again, we're okay with that as long as it matches up with Century Code.
If there are delays of an independent audit that extends the audit past the 2-year audit requirement, can an extension be requested?
If you're receiving a 2-year audit, even if it takes longer than that because of delays with whoever it is that's doing the audit, it's still just a 2-year audit. It might be delinquent, but we'll still receive it when it comes in, review it, and then you would want them to start right away on the next audit cycle as well.
I'll add to that too. So I think if you know that it's going to be late, tell us at the office, call admin or email us in and let us know that that's what's happening. And sometimes as long as you have a firm, let us know what the firm you're using and when you expect to have it, then we can kind of put that in some notes.
Thank you. What North Dakota state laws, if any, exist for public improvements and county highway equipment?
That's a great question. We've been able to look at a lot of those over the years, so we're very well aware of those Century Codes. So the public improvement one, that one's 48-01.2-02.1. And that one, there's a couple different sections there you can read, but that one will give you some idea of what those thresholds are and what kind of that entails. The other one that for county highway equipment, that's a very good topic as well. A lot of our counties will buy lots of highway equipment, so there's a threshold for there too. That one's 24-05-04. Both those codes are very important to look at.
Wonderful. Am I able to pick my framework for the audit for doing a modified cash basis versus generally accepted accounting principles?
Yes, in general, you get to decide as the auditee. If you did a GAAP audit the year before, it's going to be very difficult for you to move from a GAAP audit to a modified cash audit. You would need to have a very good reason for doing so. If you move from a modified cash audit to a GAAP audit, you're moving to a better framework, so you'd be able to do that at any time.
Do I have to have public approval for the county capital projects levy and what can be spent from it?
I can take that one. So the county capital project levy, that one you have, I believe, up to 10 mills, and that does not require approval from the voters.
Another question, who can help with city audits that are past due as the auditor is not sure how to approach that?
Contact our office and get on our wait list, and we'll do whatever we can to try to help out.
Wonderful. The balance sheet lists different classifications of fund balances, for example, restricted and unassigned. What do those classifications mean?
Good question there. So typically what we look at for fund balance is what's called GASB 54. And so if you're ever curious about what those fund balances are, I would encourage you to read them. But there's 5 main ones. They are non-spendable, unassigned, restricted, committed, and assigned. And the first one is non-spendable, and that is fund balances that cannot be spent either because they are not in spendable form or are legally or contractually required to remain intact. The 2 most common that we see are loans receivable and inventories. And so if you're able to go back to my slide deck and you go to the balance sheet, you will notice that that client had about $1 million plus of loans receivable listed as non-spendable in the special revenue fund. And if you look also in the assets section, you will see loans receivable for that same exact amount. So essentially, that asset basically just goes directly down to non-spendable fund balances. The next one, restricted fund balances, that's for fund balances that are, the main ones are tax levies. The term that they use in there is enabling legislation. But basically, like for monies that you get because you're levying property taxes or because you get highway tax distribution, stuff like that, those are classified as restricted for whatever funds they go into. Committed and assigned are similar in a sense. They do require, for committed, they require a motion carried from the entity's highest level of authority. So if you're a county, it'd be your county commission saying we want to commit X amount of dollars in such and such fund for a road project or something like that. Assigned is very similar. The only really difference is that it doesn't have to be the highest level of authority. It could be your county auditor, city finance director, school business manager, stuff like that. And then the last one is unassigned, and that's basically mostly general fund. In fact, the only time you'll see a positive unassigned fund balance is for the general fund. The other part that goes into unassigned are if you have negative fund balances for any of your other funds that might be in your special revenue or capital projects or anything like that.
Wonderful, and thank you for the questions that keep on coming in. Is the interim fund for each fund or is it for the county as a whole?
So the interim fund is set up in a way where it really needs to be for each specific fund. When you do your budget, you can calculate that 75% for the general fund for that part of the budget, and then for each special revenue fund, you would do the same thing, but it is for each individual fund and not for the entire entity.
When is the best time to use a capital project fund?
I can take that one. So one of the times that would be helpful or useful would be you have a project that you expected to be complete that year and it wasn't for some reason. Maybe there was a issue with the construction company or some other reason. And so if it's past 1 year, it's nice to be able to get that, transfer those funds into a capital projects fund, and then that fund is separated from the rest of your funds, and then it can be spent when the project can happen. And it's a good budgeting tool as well, so you don't combine funds that you don't need to.
I'll add to that a little bit too. There are times when if you take out like a debt agreement or a bond agreement, the bond agreement itself might require you to set up a capital project fund and a debt service fund for that project.
And then one last thing to add into that too is that if the project is going to be funded by property tax revenue, then GASB recommends that you set up a capital project fund as well.
Thank you. Why are revenues and expenditures listed on the income statement sometimes different from the activities statement?
So when we're going from the fund level statements to the government-wide statements, there are necessary adjustments to go from the modified accrual basis, which is the fund balance statements, to the full accrual, which is your government-wide statements. And that's those accounts that I mentioned during my presentation, like your capital assets, your debt, your compensated absences. And one quick example I could get would be if you bought a vehicle for your police department and you spent $50,000 on it. On the fund level statements, it would go into the proper fund. You would credit cash and debit public safety expenditures. Whereas on the government-wide, that amount needs to go to capital assets, which is an asset as opposed to an expenditure. And so that's where we have to, on what we call the GASB crosswalk, we have to back out that $50,000 to, so it goes onto the net position instead of being expensed. And we also have to factor in any depreciation associated with that. And so that's just one example. There's also examples for the other accounts that I mentioned too.
Does obtaining a loan for equipment count towards determining if someone is required to have an audit?
Yes, if you receive money for that, that is considered a receipt because cash is received, and that counts towards that threshold in determining whether or not you need an audit.
What type of support should I keep for small government reviews?
The primary thing to keep for the small government reviews, as for even large audits for that matter, is your bank statements and any bank recons and things that you've done of that nature as well. You want to keep for sure other documentation of expenditures, such as your invoices, things of that nature. Anytime there's projects, you want to keep those contracts. And as well, a lot of things have to be properly authorized, as you've heard in several of the questions, which means you need to keep copies of your meeting minutes as well, so that we can verify that the proper authorization was done for those things.
Credit card statements as well, right, Dan?
If I need to have an audit, does the State Auditor's Office have to conduct that audit?
No, they do not have to. I mean, these guys are the best government auditors in the state. Told you I'd get that in at least one more time. But no, any private firm can conduct that. If somebody does want us to do the audit, we'd be happy to add them to our waiting list.
Do I have to do a fraud risk assessment?
I'll take that one. So you've probably seen during my presentation that it's one of my favorite topics that we've been able to do and to help with. I think throughout the state, there are times when I think if those fraud risk assessments are there, it definitely helps remove some opportunities that people have to abuse something. It's not required as of right now, but when we do our audits, we always check to see if people have them, and we always give recommendations to have one. But again, that's a management decision if you would like to prepare one or not. But we're always up for that discussion and can help you with that.
Okay, thank you. This one is a bit longer in nature, so we'll see if we can get this answered or if we need to just schedule a call later. The question is, right now I have some funds under the special revenue funds that we are not spending anything out of for budgeting purposes like emergency, revolving loan fund, library donation fund. Unless something happens and I got wrote up in my audit for the 75% compliance finding, how else do I account for these?
I think maybe we get back to that one. Can we get some, is there an email, Emily, that we can kind of reach out and get some more information on that one?
Yeah, absolutely. If you wouldn't mind, we don't have a name associated with that question. If you wouldn't mind just shooting us an email, it's ndsao@nd.gov, and we would love to get to connect with you.
I do think too, the biggest thing there, since it is a non-levy fund, you're not, by increasing your interim fund over that 75%, it's not going to affect whether or not you're collecting taxes. There is going to be situations where, yeah, you might not be able to spend money out of a fund because it's restricted for a specific purpose. You're going to see that sometimes with like the FEMA funds. They're restricted for the projects that are happening, but those projects might happen over multiple years. A FEMA fund is a special revenue fund. So you're not, as far as I think we're concerned, we're not going to write you up on having a special revenue fund that's a non-levy fund that has an interim fund over 75%, because there's not really anything that you can do about that.
Thank you. Thanks again for the great questions that are coming in the chat box. Check and balance, or small staff performing multiple duties, is often listed as a weakness. Does the panel have any ideas of how some small government units would best be able to accomplish that segregation of duties?
So that's a great question. This happens quite often. So what we usually say is, you have a couple of different offices, or, at least a couple of people working in that office. What you can do is you can separate those functions the best you can. If you have, let's say in a school district, you have 2 people in that business office. Business manager can do some entries. The assistant can also do some entries, but just don't make sure that there's a separation between them. One may review the other's work. Sometimes in those entities, you might have another department head come over to review something. Sometimes the board can be involved in some level, and they usually are for like reviewing invoices and things like that. Also, you can, what I mentioned in my presentation is you can create a finance committee to help with that as well. So they can review things, and that could really be whatever you wish that finance committee to be like. And when the right situation is there, we've lifted findings because of that finance committee and how they've had their entity set up with a few staff. So it is possible.
What are some accounting policies that I could implement for my park district?
I can take that one too. So during my presentation, I talked a little bit about accounting policies, and some of those that we always give out would be a capital asset policy, a GASB 54 policy, which John just mentioned, credit card policies. If you have credit cards, always nice to have some there for that too. And then fraud policy. We've always recommended fraud policy since I think I've been here, and those 4 are our main ones that we always see that might be missing if we haven't been there yet. But there are many of them that you can do. There's cash ones, investment policies. There's many of them. So those are just some that I can think of.
Is there a date that I need to have my single audit completed by?
Generally, those single audits are going to be due 9 months after your year end.
Where can I find some of the numbers that would go on my schedule of expenditures of federal award CFA?
The most common places you're going to find the expenditures that are going on the CFA will be your general ledger. That's going to be the most common place, hopefully by different accounts that you've coded in there. Another area that you might find some expenditures could be on some of the federal reports that you've completed, depending on how you've coded your expenditures. And as we noted today in today's discussion, FEMA expenditures might be a little bit different depending on when your PWs are approved. So you want to pay special attention to those FEMA funds.
Should I set up a special fund for average revenue per account ARPA dollars?
Yes, that would be our general recommendation to do so.
Why don't the capital assets and long-term debt show up on the balance sheet?
Yeah, the short answer to that is like the balance sheet and the net position are presented on 2 different measurement bases. And so your balance sheet is your economic resources measurement focus, and it's the modified accrual basis. And again, that's why we have to have these GASB crosswalk adjustments to be able to get to the government-wide statements. And those government-wide statements are on the full accrual basis. And so that's why they show up on one but not the other.
Thank you. Is the State Auditor's Office able to conduct my audit right now?
No, we are not. These guys are in high demand. They're very good at what they do, and we do have a waiting list of, are we at 40, 44 entities right now that'd like us to come out and provide those services. We are more than happy to try to get 2 to it as soon as we can. We are going to be going into next session, asking for additional staff, try to get to that. But as of right now, the short answer, unfortunately, is no, we are not able to do those audits immediately.
And thanks for the great questions. They're coming in the chat box. What are the different types of opinions that can be given in the independent auditor's report?
The most common one, and thankfully for that, is the unmodified opinion. That's basically saying everything's good. The next one would be a disclaimer of opinion. That's typically for what's called a scope limitation, which is basically anything that prevents us from doing our normal audit procedures. And then adverse opinion is basically when we can know and see that, you know, there's some financial discrepancies and material weaknesses that just simply can't be resolved. Good news is between those two, I've maybe seen, as far as for the financial side of it, maybe a handful over the years that I've been here. So that's a good thing.
Great. What happens when I receive a rejected audit letter from your office?
So when we review it and for whatever reason find something that doesn't meet the standards,
Sorry for the feedback there. Would the two of you mind swapping microphones? And then just muting the other. Thank you.
All right, so let's try that again. So if we find something when we review the report that's not meeting the standards, and especially if it affects like the financial statements and the notes to the financial statements, like what John went over in his presentation, if it's a major departure from that, then we'll reject the audit report. When we do that, we put that in a letter. We state what that is. That letter goes both to the client and to whoever conducted the audit. So it then would be on whoever your auditor was to do whatever is necessary to fix that entity or that issue that caused the rejection. As part of doing that, then they would also have to, not necessarily, but most likely have to reissue the audit report, and they would need to get a new management rep letter from you, the client, and there's a few other things they have to do with dating the report and such that they have to follow that are all part of the standards. And then it would be resubmitted to our office. We would re-review that again to make sure that those items have been fixed, and then we would issue out an acceptance letter if that's the case.
Wonderful. Thank you. How is a petition audit different than a normal audit?
So that's a great question. You know, we've received some of those this year, so we've been able to give some examples of that. The differences are, you know, for petitions, our group is invited to come from the citizens of that entity. And although we love to be invited, sometimes that can be a little difficult for everybody involved with that. So the differences are, so for the petition audits, you know, our group will be able to, you know, talk to the petitioners. We get some concerns from that community, and you know, with that we'll determine what to do from there. We might be able to do some extra testing. If there's, it kind of depends on the concerns, and our risk assessment will change to match what the concerns are. So that also means that those audits get to be a little bit more lengthy in time and cost. And normal ones, you know, we always do, you know, the normal planning, our own risk assessment of that entity in general. So it's really, the main difference is that there's more risk involved because there's going to be something that triggered that event to take place. So we have to keep that in mind while we're auditing there.
Thank you so much to our panel. That does conclude the questions that we have received so far in the chat window. If you're sitting right now listening and want to think of something down the road, please feel free to drop us an email at ndsao@nd.gov. You can give us a call or find us on social media. We are always happy to connect with you and answer whatever questions that you have.